Alright, guys, good night. Two is enough, and it's seven, so let's go. Alright, so we on the chat here. No, I didn't see that yet. Alright, nice. So, once again, night everybody, right? Fellas. So, what we're looking for is we do the same thing over and over, right? So, what we're looking for, what we're trying to identify or be able to understand, or what I'm trying to show here is where to find or how to find proper entry points and essentially how to take them, right? So we're looking to identify the profitable trading strategy, right? One pair, one shot, right? So this could work on anything. It's just based on what you like. If you like faster pairs, slower pairs, is really up to you, right? So the first thing we just do is start on the daily, right? So the daily time frame is where we're going to identify major zones. Now, trading is kind of common sense, right? It's kind of logical in the way that we could approach it now. So logical in terms of the market as push, pull, right? So easy to identify. We could identify it simply like this, right? So we know common sense, the market has go up, it has come down, it has go up, it has come down, it has go up, it has come down, right? So what we're trying to identify is the moment the market deciding to do something else, right? So either to identify when it pushing down, it pushing or it's pulling essentially, right? Right. What we're trying to identify is to see or determine the point where the market reach, right? Whether it's pushing or it's pulling, right? So when the market going up, you want to wait for a logical pullback. So that's not nothing fancy. I don't know special trading thing. That is common sense now, right? Because we could identify what happening. Now, when the market is going in a particular direction, right? We want to go in the direction of the market going. So if you look here, the market going in an uptrend, right? So we have more green candles than red. So you could easily identify that the market going up, right? So to try to short the market or sell will be illogical. It just don't make sense. Nothing fancy, use your brain, right? So if you could identify in this little area here, we have more red candles and the bigger also, right? So to try to buy the market don't make sense. Yeah, common sense, nothing too fancy. So what we want to do is identify cleanly where the market is going and also find potential entry points. Potential entry points is come in the form of support, resistance, and trend lines. Right? So trend line is where the market can come down and touch once it's going in a particular direction. Support and resistance is kind of the highest and lowest points in market reach, right? So remember always, this is how you're marking up your chart to find the strategy, right? To be able to identify it. What this strategy does is it has helped it identify when major institutions enter the market and we could ride their wave essentially, right? Cool. So we have the trend line. This is a possible entry point here. Right? As I noticed, whenever the market come down here, it does kind of go back up. Once the market touch the trend line twice or more, it considered as valid, right? Cool. The next thing we will do is identify support and resistance zones. So remember, we're on the daily. So what we want to identify is the highest and lowest point the daily candles reach, right? That is where the market went up and turned around from. So I'm gonna take off this here. Alright, this is where the market went up and turned around from, and where the market come down and turn around from, right? So it's essentially where the market went and consolidated. So far, so we start to remember we still on the daily, right? So you get major zones essentially on the daily. Now the low point would essentially be here, right? Now you could redefine this. So this is not essentially the best area. So this is not the best example to give all based on how the market shape up right now, right? But all of in the group. Now the reason why I would take my time to enter last week Thursday, Friday is because for all these weeks here. So this is we start at the bottom of the trend, which is December 24th, right? December, the 30th of December last year, right? From the 30th of December last year, the market pushing all the way up. So we see me get an uptrend, right? But look at the size of the candles. Look at the size, right? So this is days, right? So each candle is a day long. Watch how much the candles moving, and then when we come last week alone, what will the candles do, right? So this would not be the ideal place to enter because of how volatile. So these candles are irregular. So even what it have, you are trading strategies, you are support and resistance. I mean, things we just utilize, but plenty time we just don't use your brain. Common sense. None of these candles since last year do anything like this. Even if you scroll back, none of the candles was ever that big and move so volatile before, right? Except in this one here. So it's a rare sight to see now. So when you're trading too, it doesn't always have to be special nothing. You could just think now, So yeah, if you don't use a little noggin sometimes too, you get chopped up. So that is why I want to stay on the market because it's simply irregular. Common sense. So it ain't hard, So the where the support level really supposed to be is down here, right? Where the market consolidated from. So this is really supposed to be your support level. Now we really want to use a support level closer to the price, right? So although this is where it's supposed to be, once again, you think through your trade now, understand? So we want to identify a support or resistance level closest to the price. So we may not necessarily find it on this daily candle here. So we could probably go down to the 4 hour, and see if we find something. Or we can maybe even come down to the hour and find something, right? So on the hour now, we see we have a better little range here, right? So we go have rules to the setup also, right? So we could pay this range now. As I say, quite down here is where it will be, right? But you ain't gonna wait for this to happen, right? Chances I would not now. So we could find a little resistance in here. So for the sake of where the market is and what it did, we could use this as we little trading range now. Right? If we pull this straight across, I'm sure it go add up to something somewhere. Right? Would it? Nah, we at all-time high sitting on nothing. Ooh, scary boy. Right. Good. My mind now. So we're using this little range here, regardless of, right? So this is where the market break a structure from, it create a level, and now we're in this little range here. So this is where the market reach all-time highs, right? So the market come up here, chop around, it didn't want to break this level, and then the market come back down here now, and we get a little consolidation here, so it's a breaking point, right? So you have this little range we trade in. What we want to essentially identify is when the market going to pick a direction with volume, right? So the way we just identify the market picking a direction with volume is big candles at breaking zones. This could happen on any time frame. This could happen on any pair, right? Once the market break a key level, right, which is either a support or a resistance zone. Once it breaks one of these areas after consolidation, that is your first indicator. So for example, we consolidated right here, right? So the market chop around. Everybody know what consolidation is. Right, the market flop around here, and we get a little thing here. Right, so this is not the prettiest box, but so the market, it go up, it come down, it go up, it come down, right? So the market kind of chop around in this area here. Remember, what moves a candle? Money moves a candle, right? So once a candle big and it break a zone, it take a lot of money, it take a lot of volume. Nobody, no one person just like us can move any of these candles. I don't even know if Trinidad have all the money to push one of these candles up like this. I don't even know, right? For the amount of US money that it is required to make candles like these, right? Significant amounts of money going here. So because if a man have $10 billion, let me say, to buy gold, and he decided to buy gold. He know why, He had $10 billion. So a man with $10 billion is not stupid, right? Rich people not dumb. You know what I'm saying, baby? right? If you're rich, you could never be stupid. So you know why it is you're buying gold. So fundamentally, you know the reason why. You see something here, something that we don't know about, and you have the money to do so. So this candle here, that breaking a zone, is somebody with money. This is our indication that the price is going to pick a direction, because somebody with money decided, though, I had to buy some gold, And when he buy the gold at a low price, he send it up, right? He buy a great deal of it, and he send up the price. This is our first indicator of the market picking a particular direction to go. Yeah, that's I'm supposed to send this link here for somebody. Yeah. So we're going to be identifying somebody with money via this big green candle here. Right? So this is what it is we're going to see as our first indicator. So these indicators, like our RSI here, that's irrelevant. Any indicator you use in matter of fact is irrelevant. Right? Indicator just follow the price. The price is what happening on the chart. This is what this line here and how the candle is forming and shaping and where it form and shape is most important. You could use indicators to confirm what you already analyze here. Right? That's why when you watch the majority of good traders or professional traders, it doesn't have no big set of indicators on each chart. It's not necessary. If you could identify things like these, you could be able to make determinations of what happened now, right? Fundamentally. So the next thing we want to do after identifying somebody with money is to confirm the level is strong, right? Now, if the price is going up, it would create higher highs, right? If the price going down, it would create lower lows. So to confirm a higher high, so if we look at it, let me say we go back out, right? Let me say we go back out on the daily here, right? So let me watch this little trend here, right? So whenever the market is going in a particular direction, it will be identified via higher highs and higher lows. So let me go with this high is higher than this high, higher than this high, right? So on and so forth, right? Every time the market pull and push, it pulling and pushing higher, right? So we can see the circles ascending, essentially, they're going up, right? So that's one of your indicators to determine whether or not we're in an uptrend, and in addition to things like a trend line and stuff like that. And so we also identify higher highs and higher lows, right, by the break of market structure. Alright, so remember the market has push, it has pull. It has push, it has pull. So what you want to do is to determine when the market pushing and pulling and take a trade based on that now. Alright? So we could see, we could identify these little things. So making little support and resistance areas, right, in the market. So to confirm, let me say right here, right, to confirm that the market, more time frame I was on here. So like in a case like this here, so to confirm the market is valid, because we was looking at this, were we? Right, we was looking at this here. To confirm that the market is valid, what they needed to do is pull back and retest the zone. Right? So when they retest in the zone, it go and confirm, because sometimes, right, the market could go up and it could come back down and just, change on So you want the market to pull back and confirm the zone. So you want a red candle. So remember, within our trading range, we're waiting for the market to break zones, right? You needed to break either your support level to that big candle to show you that the market possibly looking to go down, because somebody with money decided that the price should go down, or you wanted to break a zone for the price to go up because somebody with money, somebody essentially who's smarter than you, decided that the price should go up, right? We don't know, right? We just looking to identify the guys who know what they're doing. So we copying off the test, right? So them smart, them are the money, them is the A students, we is the C and D students, we copying, right? No shame in the copy. identify what they're doing and follow what they're doing. It don't make sense trying to figure it out and predict it. They can't. Right? They're not for we, they're for them. We just get a little blind. So always remember that. So what we're looking for is to identify what they're doing and follow suit. So once the market chopping around in that area, that means that the price don't know what they're doing, or it don't have enough volume of money to pick a direction. It eventually will, right? But until then, it's having a hard time. So what we want to see is the price essentially validating the area to confirm that it is indeed going up. So remember, we're looking for the higher highs, right? But to confirm a higher high, the market had to stay above a zone. It had to confirm or keep the higher high essentially. So an example of where or why it may not work sometimes is, let me say, like here, right? The market consolidating here, right? So we're identifying a trading range, right? So we're identifying, let's put this color, right? Whatever. So we identify the trading range here. Now, if you notice, the market keep trying to break the zone, right? So in hindsight, you would see a wick breaking. You would see, you would see wicks. Now, while this happening, because this is an hour-long candle, so for some quite significant, for some time, a quite significant period of time, the market would be above this level here, right? So we're trying to break through, trying to break through, but it can't, right? So what it needed the candle to do is essentially close above one of these zones and pull back to validate that this zone is correct. Because it could break the zone, right? And then it wick out. It didn't hold the strength now. It could break the zone, but it didn't hold the strength. You need the market to hold the strength. The confirmation of the strength being held is a retest. So you want the market to essentially break the zone and come back and hold the zone. So let me go back down to the daily here. Right? So remember, it's the same thing we're doing over and over, right? What we want is the market to essentially get the volume to break a zone, right? Close, stay above the zone, all right, nice. And then we need the market to come back and close above the zone to confirm it. Otherwise, you will get something like this here. You see like how it is, the market. All right, let me say we go in with this, right? We go with here. I'll use this example. The market break above the zone and close, and then the very next candle pull below it. Notice that? Come and break back in the zone. Come here again, push up, close above the zone, and then the very next candle pull back. So you need to confirm it. So that's part of your trading strategy now. Confirming the zone. As opposed to here, right, when the market push up and then you get your red candle. So that one of him like Friday, and then I said I need a red candle to print before I decide to take a trade. I need a red candle to print and close higher to confirm that the market going up. Because once it close higher, chances are it going and push up, right? Once it come and you get the red candles and it close higher than the previous one, chances are you get a push up. Come back, retest the zone, hold, close above, chances are you get a push up, right? As opposed to where's that? We go how to use that we go how to use. I wonder if we could use this one. We could use this one, right? This could actually be an example, right? It could actually be one. Right? No, all pullbacks don't look the same, and it don't always happen in the same period of time either, right? So let me say this here is a pullback. So remember the pullback is a close above the zone, right? So when it break a structure like this, it break your resistance or your support. Once it break it, you need it to come back to it and close above it. So you select how the market break here, you get this here. Yeah. So this is not the perfect example because it push up, right? It just gone. Ooh. But it did eventually come back to the zone now, right? So this is two good examples within each other. Right, so two good examples within each other. So can I use this? All right, so let me go higher time frame, right? So higher time frame, this year could be your resistance zone essentially, right? So the market break a resistance, right? Higher time frame. Market break a resistance, and let me just ignore this little period, this little part here. The market come back and it close above your zone, right? So this was your resistance it break from because it consolidates here. It break, right? Ignore this little peak here, but look at this one. So it break here, and then it make the curve. Let me see if we can get what we have here. Alright, so the market break, and then we get this big curve, and it come back and it test this area here, right? So it come back and it test this area. So we get this market come and do this. Pow. It close higher than this high here, right? So now we know this market close above here. So this is a valid retest, right? The way that it could not work, right? The way that it could not work is this little one here. So let me go internally. So this is a resistance here. The market break, and it come back to test it. But you see how it closed below? It come and it break back to the structure, and we get more cells. That is what they're looking for, right? To identify. So that's why when it is you see in these structures and they identify your one thing, which is a bullish or bearish engulfing, you want to wait for the market to come and confirm your zone. And there is where you would look for entries. Like our Friday say we're waiting is because we ain't get no confirmations. Nothing in say for sure that the market not going and just sell off. Now it might seem like it good and just go up. It very well could happen. We don't know. But the market wouldn't just keep one big green candle, wouldn't just keep going up and up and up. Logically. So remember, forget the strategy, forget the fancy thing. The market logically, because it always have been. So what we're looking to do is remember identify patterns. We're using things that already happened previously to make determinations or predictions of what may happen in the future. Like all we're doing. We're using past data to make determinations of future events, right? So that is all. So when the market break, you wait for it to come back and validate your zone. So your first indicator is the break. Your second is the market to pull back and close above. So like we say, the market break here, you get a big green handle, it come back and it touch your zone essentially, and it close higher. That is what you're going to use to determine your strategy. So that is what you're identifying. Break of structures and validation. So you see like here, you see like how the market didn't come back and touch nothing here, we ain't get no green candles around here now, it's gone now. This is an anomaly. This will happen. That is why we wait. Because the same way how this could have go, remember all of this up here happened in hindsight. We didn't know this was going to happen. We just using what we are accustomed using. So we have a strategy. We have something that could almost be predictable in the market because it just keep happening. My point to that is, let's see how it was shining on the daily, higher highs, higher lows, right? So that is what we're looking to identify. So if we don't look for that thing that we know that's always happen, then we can't take trades, right? You can't make it up as along, like you can't make it up as you go along. You need to use confirmations and definite things for certain to be able to make determinations now. So like how the market break here and you don't get your touch, you don't know what would happen, all of this didn't, you don't know what will happen here. Don't take the trade because you're not getting all your confirmations now. The confirmations is what you know does work because it have been working all the time. So it's a predictable thing. If you can't almost use it as a magic ball, then you can't take the trades now. Follow? So like how the market come here and the dip. Now this one kind of a little iffy because it still make a higher high, but it fake out. That's how trading let's go, right? You don't always get a perfect setup. Because like this year, right? I actually did hold this trade. This was the trade I called live actually, this one here. Now because I risked properly, I could leave my stop loss here, right? Until it hit essentially now. Because if it did hit, I would not lose as much money now because I risked it properly. So remember all the things go hand in hand. But this year is I don't say exception to the rule, right? But But these things like these could happen. So the next half of it is risk management, paying your stop loss where it necessarily could be. But ideally, if it was waiting for this pullback to enter the trade, right, then you may have come out of the trade. It would have been fine because the market break back in the structure. So well, the structure was really here, to be quite honest, right? So it pulled back to touch here, but here could have also been valid. Right? It could have break the structure and it could have pulled back right there into the trade. Now we're looking for a breaker structure and a pullback on the 15-minute time frame. So right now we're on the actually 15, man. Good. So when we identify a big structure on the daily, the forward, we come down the road, we want to see the actual break on the 15. So we go back up to the daily and do all the strategy, right? So we move all this bush here. Right? So this is how we applying it to the strategy. One simple thing over and over. So moving all this. We find it here. Right. So let me say we identify we trading range, right? This is we trading range here. This is where we get the market to break from. It retested the zone. It hold above. This is where we're looking to take little entries, right? You could enter anywhere around here, and you could come down to the 1 minute and the 5 minutes and get a sniper entry and all that pretty thing, right? Me personally, I would not take a trade after seeing this, right? Because this is one big candle that clear all these candles there. So I personally wouldn't have taken a trade. All I why Friday, what day this was? Friday itself, right? All I why I was so skeptical and entering the market now. Because we get the nice uptrend and then boom, out of nowhere you get this big red candle and then the market still buy. It was crazy. This is a real wild market. It was a sight to behold essentially, you know. Right? Market break, you get no retest and all kind of mad thing. Right? Now what you're going to look for essentially, let me see if we find a nice little trend. Right? A regular looking, market structure. Right, let me go with here, right? Not the perfect one, but we will accept it still. Now, let me say we identify this little point in the market here, and we decide that we're going to possibly look for this is we trading range, right? So this little area here is essentially. I'm gonna use this. I go to here. So let me say the market reach somewhere here, right? And we identify the consolidation zone. So we know the market, consolidating anywhere around here. The market flippy floppy. It's still not a cleanest one, but we go take that. Can we? Alright, I go down ratchet. Alright, ratchet. Ratchet for the sake of education. Right? I remember it wouldn't always look as clean, right? So we identify this little area here, right? This little consolidation area. So the market come here, it flip around, it sell off, market come back up here, chop around, get a smaller sell, no problem. What you are going to look for as a trader, right? What we are trying to identify is when the market for certain going to make a new high, right? So part of the strategy, right, that I haven't gone over since the initial classes is you want to look for when higher highs are forming out of a downtrend essentially. So for me because I fundamentally bullish on gold because gold has just keep going up in value, I would more look for buys. There's more buyers of gold and sellers of gold, right? So that just comes with knowing what it is you're trading now. So because I'm looking for more buyers of gold, I would always look for, the as we was identifying in the beginning, it didn't have much sellers like that. It didn't have as much red candles printing, so it had more green. So you want to go with the majority now, which is green, right? So you want to follow everybody doing in a case like this now. So this is a key part of your strategy here. No, I didn't really talk about it much, but it is. You ideally want to identify when this is happening, this little area here, which I'll clarify for you, out of a downtrend essentially. So you kind of want, because remember, you know the market going and pull back, eh? You know we're going and push and pull. We work with higher time frame, so you just want to see higher time frame push and pulls now. So when you get a nice push, on a higher time frame, that always get some decent moves. And then the market will pull back, but because we're using higher time frames, you'll also wait it out. So you might wait days to get a good trade now, but when you get it, they go run, right? So that's what we do in here. So let me say this is a 1 day pullback. It take a whole day for this to pull back here, right? Or it take a 2 days, whatever. What you want to identify essentially is when the market making suddenly made the higher highs, right? So you can see we printing red candles coming down here. The market selling. Yeah, I'm more red in the market. Chop around, whatever, but we getting red now. So the market come. Out of nowhere, we come and we get a big green candle. Close to our key level. So your key level is a trend line. Eh? So that's why we work with key levels. Eh? Okay, yeah, okay, trend line here. But if you didn't draw this, you didn't see this. Right? So you identify this. Now, all the time the market, so this low here, the market printing red candles, right? So the market come and make this low is lower than this low, which is lower than this low, which is lower than, let me say, this low, right? So you can see the market is going down. And then all of a sudden, the markets have to do this. Markets have to make higher highs. This high higher than this high, this high higher than this high, yeah, up there. So now we could see that the market shift. Yeah? We coming down all the time and then all of a sudden we going up. So you could see that the market change direction. To identify when that's going to happen fundamentally and very efficiently, this is what you're going to look for in the market. Right? You're going to look to see when the market selling, making low and lows, and when it eventually and inevitably makes a new high. So all the time, if the market going to sell, it's going to clear out this low here and make a new low. Right? Because that's what the market is doing, making new lows. It has come and it go clear out this. And we could identify, we know this will happen. Because every time it pull back and it sell off to make a new low, it has cleared the previous one. Right? Like how a downtrend does work, or an uptrend essentially. When the market it's selling, it push up, come clear. Right? There we go. Where the market break, right? The market break this zone here again. Right? So it come down, the gather push up, come clear the zone, right? So clear this low here essentially. The low will be the lowest part the market was. So push up, come eat away this. Push up, come back, eat away this low. And that is how the market does keep making newer lows. Right? They can identify it like that. Now. Come, get a push up, clear this low. Right? So it's making new lows. It's clearing the previous low. But if we're keen to identify, or we're keen on the price action, or we're keen on what the market doing, we would identify or see that, well, all right, the market now, when it come and it pull back, it didn't clear this low. It come and it pull higher. And it push and it pull back and it stay higher than this one and it push and it come back, right? What we want to do is identify the last high that the market made. So this will be the last high, right? This the last little consolidation area. So we had to identify support and resistance. So this could be it, right? With the support and resistance area. What we waiting for is the market now. So even if you get higher highs here, you still can't confirm it yet, right? You need a higher time frame confirmation. a higher time frame confirmation will come on the 15 minute. Right, so that is why we just look for 15-minute entries now. So sometimes when I enter a trade, I go sit down and I go wait 30. I go call I will say, boy, I'm looking for buys and whatever, and then they might get trade 30 minutes later for the or in the group, so they don't know how I trade, right? That is what they're waiting for. Waiting for the market to confirm things now. Right? So it's no rush, patience. It's easy to lose your money, so you want to be careful, take your time. Right? So the market come, break the structure, it break through. What we're then looking for as we strategy, we're looking for the market to confirm it making a higher high. So you're waiting for the market. So this is happening all time frames, right? You're waiting for the market to pull back, confirm the high, and anywhere here on the close of your candle is where you would enter. This here is where your entry point would be. So we identify the cells, the market come and break the previous cycle. Remember, this come like we resistance zone. We're waiting for the market to break the resistance zone. Alright, if we go up, somebody asking something. Hey, the class get full by anyone. No all they reach by. Good night.
Good night, bro.
Alright, nice. Alright, even like here we could see that the market eventually or inevitably did break the structure, right? So we're looking at a bullish engulf in the market breakout zone. So we want to do is identify when this happening on a lower time frame. The 50-minute is a good enough confirmation of such now. Right? Good enough confirmation. So we get the break. Right? Remember, all candles inside of bigger candles, right? So we get the break. Wonderful. Market break structure. You wait for it to pull back. Anyway, on the close of that candle, once that candle close higher, you're taking your entry. Now, the next half of your strategy, which I would say even more important than doing this thing itself, is your risk management. Now, it don't matter how good your strategy itself is, you want to be able to hold a trade. Because remember, you don't know when a trade go flop around on here, you never know. So you want to be able to identify for certain but you want to be able to hold a trading event at the flop around. So remember, most times the market don't just go one direction, right? Immediately. Sometimes it does, most times it doesn't. Right? So you can't say for sure the market going and push up. Right? You can't do that. So in order to hold through your trade, you need to risk properly. Because if it is, and for who does trade, right? For the traders, if you're over leveraged, right? For the ones who would take trades already, right? Everybody over leveraged in their life. That is a trading thing. All traders is doing. As soon as the market, let me say you enter here, right? You enter right at the edge of this candle here, right? Now, this candle might have pushed down a little bit before it go up, right? By the time this candle reach here, you done too deep in Jordan, you want to cut that trade. You don't even know the candle going and shoot straight up the road, right? Right here to right here, you $30-$40 down already. Okay, you enter too aggressively. The marketing go nowhere near your stop loss, you know. But you had a cut, because there's a 15-minute This is a 15-minute candle there. Let me see what 5 and a 1 go look like. If I could find that. Right. So you enter anywhere around here. This little flip around here, this little flippy floppiness, are you panicking? This little thing here, because you over leveraged. Nowhere near your stop loss, you know, but you're panicking. You can't hold the trade now. Right? So you want to risk properly so you can pay your stop loss where it needs to go now. Right? So if it is you can't put your stop loss where it needs to go, you either don't have enough money to trade or you over leverage. One out of the two. If you don't have enough money to trade, you have to consider again a prop firm, a prop fund, whichever one you want to say. You have to consider again an equity. So you have to either use their leverage or put more money in a trading account. Don't be fooled by paying small money in an account and flipping it to big money. That don't really happen, right? Like nothing. If you do it, you could only do it once. I'm sure about that. Otherwise, everybody will have $100 in and be millionaires. It don't work like that. So you had to get more money. So you see that. So the thing with it, right? When you're seeing people trading with plenty money, you had to just have a big bank and use a little bit now. You know what I mean? You had to be able to, you had to be like a gentle giant. I had real money, but I risking a little bit. But the little bit I risking out of my plenty money is still significant enough for me to do something now. Right? So that is where you want that's the position you essentially want to have yourself in. You don't want to be in a position where they're fighting up and need the money or only have $100 to invest. $100 USDT is, let me say, it is as let me consider this as a business. Your 100 USDT, let me say, is 800 TT dollars. So it's a business, right? Remember, you invested into your account and you're trying to make gains on your investment, right? That is what trading is essentially. It's a business. You invest money into the markets. I go in and buy some gold, and I want to see returns on my investment. So it could be Bitcoin, they could trade oil, they could trade wheat, timber, stocks, whatever. You take an investment and you're looking for it to appreciate. If you take 800 TT dollars and you decided to open a business, what business can you open and what would your returns be? Right? You don't have to answer me yet. Think about it for yourself. I only have $800 and I want to open a business in Trinidad. What business can I open and how much money would I get in returns from my 800 TT dollar business? Nothing. You ain't hand we're going to sell water this side of the road. You could do that, how much money you'll get, the effort that they put in. So if you think about it like that, your $800 that they're putting in here is nothing. So you can't expect to turn that into $1 million. So be patient with yourself, right? Your investment is small. So if you don't have the capital, don't rush the system. Don't look at the money, you have to look at the percentages that you get, right? So percentages on your money is what matters, right? Trading is an expensive hobby, it's an expensive game, it's a big business to get into. It has plenty of money, but you ain't coming in with small money to get that. People don't like to hear it, but it's the truth, right? And if you go against that, then you would see how easy it is to just lose your money. It's nothing, right? So risk properly, please, right? You can't get all the money in one trade. You can't fix all your problems in one trade. You're most likely to lose your money, right? So be able to put your stop loss where it needs to be. If you enter a trade and you pull your stop loss and you cannot hold it or it's too much money, you either over leverage, you put too much money on it, or you don't have enough capital to begin with. According to the strategy, you are most likely to win the trade. Probabilities, that's what trading is. If you follow the strategy, you follow the rules, the people them who done in here and seen the trades, how much losses will us really take? Very few. You're most likely to win. Take your time, right? Play the game how the game is designed to play by the people them rules now, right? And that's essentially how it is we're going to take our trades and replicate the strategy over and over. A risk to reward to start, believe it as 2-to-1. Right? You will get a short enough trade you could still get your money relatively quickly. You'll still get a higher risk to rewards. In the event that you do lose, you will still kind of be up. And they'll give you a little bit of ability to hold through your trades and them kind of thing now. Right? So you want to leave it for a little 2-to-1 at the stand, and according to the strategy too, you will get a 2-to-1, right? Yeah, because according to the time frames that we use and stuff, so you'll get the 2-to-1. More than likely you'll get a 2-to-1. The bigger the move you look for, the lower your win rate would be too, right? So that is where the little scalping that's coming into now. So if you also a big move, chances are you will get stop loss more often now. So you gotta kinda nip at it, take your time, and you eventually get there. So that's what we're looking for in terms of the strategy, right? We're looking for the market to break a level, pull back to the level, and push on, right? That's essentially what it is we're doing here. So we're identifying it as such. So because we know what we're looking for it everywhere, right? So you can look for it in this same range here. So the market could only do one of three things. It could go up, it could go down, or it could go sideways. Now, trading is like a game. You're playing chess, right? You're anticipating the moves that the market can make. Please do not ever predict where the market would go. If you're going and predict where the market would go, don't say it around me, we will fall out. Nobody could predict where the market would go. That is insider trading. If it is, you know what's going to happen, or else everybody would win. Right? The fact that Everybody that still lose is because they can't predict it. Probabilities is what trading is. What is most likely to happen based on past confirmations. So because we know, based on past confirmations, years worth of data, the market could only do one of three things. We would anticipate which one of those three things the market would do, and then take a trade based on what the market would do, right? Because we know it could only do one of three things. The market ain't go just make a circle. You know that type of way? It go either go push up, it go push down, it go just chop around here indefinitely. But either which way, you're right. You understand what I'm saying? Right? So the market can't fool you. It could only do them things. And as we could see, to confirm what the market doing, we have a rigid set of rules. Follow the rules rigidly. Every single one of them must be implemented every single time. It don't matter. I don't care how good a setup looking, risk the same amount. The account would build and it would be relative. The trades you're taking will be relative to the account size. How much time you enter a trade and you're getting through, and as you up your lot size, you lost. That is the trading jumbie. Don't get caught up with that, boy. Right? Risk the same amount every time. Your 1%, your 2% would increase as your balance increase. Take your time. This is not that today for tomorrow thing. Look long, medium to long term. I ain't saying you ain't gonna make no money. I ain't saying you ain't gonna live your life. I ain't saying none of that. But if it is you're going against the grain of what trading is, you are going to lose your money. Right? So, boom. How are we going and look for trades here? Right? Now, this could be any pair. It don't matter. The reason I like gold is because I traded that for a relatively long period of time. And gold, because it bought by institutions, it's more likely to respect zones now. A good price is a good price, right? So that's essentially what we're looking at. We're looking to buy something at good prices. Yeah. So, because of who purchases gold for the most part, that I saw it as the price would respect certain zones now, because a good price for something is a good price for something, right? So I like commodities to trade. The market could do three things. It could break the zone and continue going higher. It could pull back to validate this zone here, and then it could continue to push up, right? So this is one of the options the market could do, probability wise, right? We know this. So the market could do so. That is trade one. The market could also come and go up and down, up and down, up and down. Consolidate, right? Or kind of mad thing. That is option two. The market could also come, break the zone, come below, retest, and go lower. That is option three. The market going to only do one of these three things. So what we will do as traders, because we know the market doing, it can't fool you. It's a game, right? You're looking at moves, playing chess, right? Don't think about it as nothing else. Have fun doing it and play the game. Because we know what will happen. We would wait for one of them things to happen. So remember, we don't have these things set up, right? We done pull with trend line. We know that the market may come along to the trend line. That might be too far. All right, we miss it. I don't pull trend lines on lower time frame until I actually in the trade. I don't find lower time frame trend lines to be valid. Right, so I would only hold at a lower term trend line, like a 15-minute trend, provided already in the trade now. Right, so don't have to fight to put that. I just look at the major zones for the most part. The prices respect major zones. So if you had to wait longer for a trade, wait longer for the trade, there is no rule say you had to trade every day. Nobody tell you have to do it every day. Right? Wait a day or two. Detox your mind too now, as opposed to just sit down in there every day chopping around. Right? Take your time, look for a good little move, relax yourself. But I assure you, when you get it, you're going and get some monsters like these now. Right? So we waiting. So right now we know the market in the middle. They don't have a clear direction. It's not going up, it's not going down. You're just in the middle here. So we wait. What we would do is set an alert below the low. So remember, we're looking for the market to break structures, right? We're looking for the market to create lows and highs. So we're looking for the market to break a zone. So if the market go below your support, chances are it's going to continue lower. If the market go above your high, chances are it will continue higher. So remember, we have the confirmations, right? Wonderful. And then we wait. So we waiting for the confirmations. Confirmations, market a break, bullish engulfing, close strong, pull back, close higher, validate the zone, go forward. Right? This is what we're looking for. Our entry point will be here. Like trade 1. Option 2. The other thing the market can do is come, go below, close strong, pull back, close below, go lower. Wonderful. Our entry point will actually be here. Anybody know why the entry point will be here instead of up here? Or somebody to give me the answer. Why it is I would enter here when the market pull back, and I would not enter here when the market break below. I was somebody give me the answer. Let's see if anybody know. I mentioned it before.
That'll be breaker structure.
Who talking to me here?
Yeah,
Yeah, bro. Why it is the mark? Why it is we take entry there?
the breaker structure.
It's a breaker
You
structure.
look to your left here.
Wonderful. The market break the structure from below. That is why we will take it. Now, because we anticipated the market to keep going up, we need to confirm the lower lows. So that is why we would only take the trade if the market closed below this low here. Right? But in case of this, we end the trend. So we already move in the direction that the market going. So we could take it on the pullback and the close. For this one, we need more confirmation to go against what the market doing overall. So we will take it here. Right? That this is essentially why it is we would take the entry here, right? So we have these two options available to where the market will go to trade. Yeah. So we're waiting for the market to break above and go, come below here and go. So because we know the only three things we could do, we could anticipate anyone and hold on. Other than that, we're going to just sit down in the middle here and do nothing. So until the market do one out of them two things, we do nothing. I don't care what happened in the middle here. Whatever happened, this could happen whole week. I ain't trading whole week. I don't care. It's irrelevant because it's not going anywhere ultimately, right? Because it could come down here, and then it could just shoot quite up here, and then come back here, and then come back here, and then shoot right down here. You don't want to be in a position where the market chopping around and flopping around, and right? You don't want to be in that position essentially. So you want to wait until you get your setups, the things that you know would happen most likely, right? And that's essentially the trading setup, that's the trading strategy, and that is what we're waiting to see over and over again, right? Anybody have any questions concerning what we talk about here tonight? All right, so everybody know everybody's bad traders. I was telling me here.
Oh, you ask and they Malu.
Huh?
You ask a question, eh?
Yeah, so the question is if everybody understand, if anybody need any assistance in understanding anything, if everybody know what we're on. Any questions? Anything you don't know? Anything you're not sure about?
No, so far it was clear. So far it was good.
All right. If we don't
You do
have
a
any,
proper breakdown then.
all right. So if you have no questions, then we will take it here in for tomorrow. So I see in some strange races here. Where does
Yeah, you're on Telegram.
Where does
the, I seen some people that not in the upcast here. The people who everybody in here in the upcast? Oh, we are strangers in here.
The Senate over on next side, boy.
Oh.
And the here on I know if you post
Oh.
in the general on your podcast too.
Nah. So there's the pay in the general. Okay. So for Alpha Core people, tomorrow at 9 o'clock, 9 a.m. is where it is. You would have I would have a class in the morning. So Mondays and Wednesdays, in Alpha Core you would have a chat breakdown. Yeah. So tomorrow morning for 9 o'clock, you'll have a class for the right Monday and Wednesdays. I think it have a schedule in there. Yeah. So tomorrow morning for 9 o'clock, we'll have our next class for Alpha Core members. Sunday at
I have a
7.
question when you're done, Malo.
Yeah, good. You ask one time.
I'm watching on the RSI, the
Mm-hmm.
market at a high, right?
Mm-hmm.
What this is the 15 or the daily?
This is only the chart looking right now is only forward. So the RSI is confirmed. Not confirm, but it does give indications of if it is the market may be overbought, oversold, right? So it's as if it due for correction or not. So it's not a definite thing, right? But it does give some indication of what the market may be doing. So the RSI is used kind of like guardrails, right? Guardrails in terms of, all right. So if the market kind of come up here, as you can see, when it come up to this level here, which I set it as this was with the 80, right? It would turn around essentially, right? It overbought. There are plenty buyers in the market. Remember, the market had a push and pull, right? So it would essentially sell off now, right? So it's an indicator to see where the market may be. So if it come down to the 50 line, that could be a deeper retracement. Now, if it break it, and you'll look and you confirm on the chart that the market come down to the 50, it break it, and then it breaking a low, then it could possibly use it as extra confirmation for sales. If the market quite up here as a high, like we say in a higher time frame, whatever time frame you're trading on, it does a time frame based. Right? Now remember, you want all your time frames to line up, so you could always do that could be a whole class in itself to see and understand how to use the RSI. But essentially, if let me say the RSI up here by this top guardrail, and then the market high and it like a do for correction, kind of like how it is right now, it could be additional confirmation to take your sales. If the market low down here and the RSI low below here, it could be extra confirmation for you to take a buy. So let me say the market close to support, RSI low, additional confirmation. So same thing like if it on top here and the RSI high, additional confirmation for you to go down. So like how it is the market up here consolidating, and it due to get a little pullback and the RSI high here, you might get a sell. So the additional confirmation for your sell. Right? So that's essentially how it is used. You could use it on a time frame by time frame basis. I try not to put too much energy into it because this thing could be quite up here and it could stay up here, right, for a very long time. So it's just to be able to kind of peep what you already know and add an extra confirmation to what you're already looking at now. So like already RSI high here and I kind of already expected it to pull back. It would be a little more confirmation that the market would kind of be exhausting. Maybe I might wait to see if it come down to the 50, start to reject, right? Because the market can come down to this level here, right? The market could come down here. So if the market come down here, right? Because this is really where the market break from, right? This is a major or bigger, support here now. So you could expect the market to come here, possibly, we don't know, right? Let me say it could come down here, and then the RSI come down here, and it start to reject from here, it rejecting off the 50, then it could possibly look for an entry point now, right? So that is what we looking for there, right? So that's how we use it. But as we go deeper, you always get into it more.
Okay, one more question. If you go back on I think it's the daily I was on just now. Or there's the forward here, or there's the daily?
On the forward, but this is the forward here. You want to go on the daily?
Yeah.
Alright.
Right. The zone in the middle. The zone in the middle. You didn't draw that there. You draw this. You draw that zone on the forward.
Yeah, so that's so really and truly is the highs and lows, right? So the zone's supposed to be drawn down here, but we can't wait for the market to come down here. It probably wouldn't, right? So here is the zone, but I just draw closer trading range now. So
Right. Come on. Let me question be a little more precise. What did you use to determine if to draw the zone there?
a consolidation zone closer to the price.
I'm confused.
All right. So we just draw the zone on the daily, right? Normally, so we just mark up on the daily, yeah. So when we draw in, we will draw we support quite down here, highest and lowest points. Yeah, confirm.
Yeah. Yeah.
Right. Now, based on now, remember we just using we noggin, common sense. Chances are the market now coming quite back down here, and then we're going to wait for all of this. You don't know. So we're looking for we intraday trading. So we're looking for closer zones, right? So a high time frame is still considered as a 15-minute, right? So to find some kind of or a better structure based on how the market shape up right now, we look to identify a trading range closer to where the price currently is. So we know for sure that the all-time high is this thing here, right? This is the all-time high. So if it break here, we gain more buys. The market give us a little structure here. So we got a little push here, we got a little pullback here, we got a little push here. This is a little range inside here that we get. The market break out the zone, and we got a little push in this little zone here, right? So this is a little trading range in here. Now this is still on the hour time frame now. So we're still looking for a little move within this area here, right? So we don't have to. So if I scroll along, remember we're gonna be looking for. Oh God. If you draw the zone quite down there, is you gonna be waiting for the market to come and break this low, you know. So that kind of implausible, and you ain't gonna wait so long to see if this happen. It's more likely wouldn't now. So we're just looking for a support and resistance closer to where the current price is now, as opposed to drawing it quite down here. You understand what I'm saying? Because you gotta wait for the market to come quite down here to break this low before you take a
Yeah.
sell.
So that would be like you just waiting on the perfect trade where it really do exist.
Correct. Correct. Right? Correct. So we take we create support and resistance internally now. Yeah? So we take our internal trade, our internal essentially support and resistance. We still pull it on the hour, and we still get a nice little break. So remember, all how the market move here is an anomaly. It don't move like that essentially. Yeah? Right? It don't really move like that essentially. This big impulsive move we get here, from the beginning of the class, I say that if we right now on the daily, since last year December, the market buying, but none of these candles ridiculously huge like this. This is not a normal thing. So this is not just I go and trade this now. This where this happened before, right? Where right now we in February 2024. We ain't get no weird candles like that. So there's an anomaly. It's pure common sense. So you take your time and you wait for it. You know the market to settle out and do what it does usually do. So I rather go with information like this. When the market have one kind of size candle, it go in one direction, it's more predictable. Right? As opposed to just coming here now and this madness. We don't know what this is now. And this is a serious thing we know
Big move.
right. So the market don't do this now. Right? So because it don't do this is kinda undiscovered territory. So you ain't trading as a smart trader, you ain't just trading this because you don't have any confirmation of what is especially on gold, the bigger it buy, the bigger it's selling it. So you don't know now. Right? Plus to the market. So this is kinda more advanced, but the market break the zone here, it never validate this. So we got a big move, remember waiting for the market to pull back. The market could still come back and
Yeah, it's a
validate the
pullback
zone.
to retest that major neckline
Correct.
there.
And
Yeah.
here's where we get a proper trade now. So you don't know now, boy. So you have to be cautious always, simply because you don't know. Right? So for now, we will take it small and we will just see what the market do. So because it do this weird thing that it never do before, we will hold on to get proper confirmations now. So the market break right here, you get a little pullback, so it validate this little area here, it close, It push up, and now it don't want to break here, so we get more consolidation. So this little range here is a decent enough range to look for entry on now. Right, so we go wait for the market to break below and see what it do, wait for it to push on, see what it do, and we so on, and that's how we function it now. Right? So that is essentially what we're looking for. So that is why I use this hour time frame here, as opposed to waiting for this now. Chances are you ain't getting this now, but and if the market wants to come down here, you're going to want to catch yourselves on the way down, you know?
Yeah.
So that is why we use that. Anybody else have any questions? Alright, so I don't like to run the classes too long, right? We just get diminishing returns now. So if nobody have anything, then we could push on, right? So tomorrow goes with at 9 a.m. Alpha Core members, or they'll get, I'll be on again to show them what's going on. Yep, cast man, well, I don't know what's going on now, but I go see you on that side. Right? I don't know. Later.
Malo,
Oh.
this class recorded.
Yeah, so bro, so this well, to be quite honest, bro, this class wasn't supposed to be public ever. So this recording would really be for people on our side now, but to be quite honest. So tomorrow goes with your Monday and Wednesday's class would be recorded. Right? This one will be recorded for Yepcast members. Yeah? So though they know harass. So tomorrow's class will be recorded. I do the same thing over and over, right? So tomorrow it will be essentially the same thing, bro. Yeah? All right, later.